It is my pleasure once again to welcome us again for this special segment of our training. We started this training from the beginning of this year, and we want to make sure that all that we're expecting from our businesses, from our aspirations, and our expectations comes true. So today I want to deal with something that is very key, a subject that you cannot do without as far as you are a businessman, a company owner, and individuals. So today I'm considering tax matters for business owners and individuals. Taxes must be paid. And as far as we have come to this extent in our country, we should understand that levies, taxes are key in the policy of our country. And if we're aware of this, we should do something about it, especially we businessmen and those of us that are working in the public services. And then the sole traders also, tax affects you in diverse ways. So we want to look at what we should do in order to cushion and then reduce the heavy tax drastically from our businesses and from ourselves. So listen to this important information. If you are a business owner or you are planning to become one, this information is for you. Number one, if you have a registered a limited liability company with the Corporate Affairs Commissions, and you have opened a bank account in your company name, don't use the account for personal transactions. If you do, you run the risk of having paid tax heavily. You have the issues of taxes with the FIRS, Federal Internal Revenue Service. And sometime, if you remember, I talked about this matter during the time we're dealing with cash management. It will be more appropriate for you as a business individuals not to mix up your personal money with the business money in the same account, because it attracts heavy taxes. So you must be able to separate and put a difference between your business bank accounts and your own personal bank accounts. Number two, information you must know. When FIRS discovered a such bank account with your own personal PVN, it is very easy for them. They will ask you to account for the money. So they will ask you to present different kinds of accounts, such as audited financial statements, management account, your own cash books, etc. You will be expected to show evidence of your VAT, value added tax, and then your withholding tax payment as well. Otherwise, they won't let you go. Another thing that we must understand is this. If you claim your company is not doing well or not doing any business at all, they will not believe, because there are transactions in the company's bank accounts. So they will assume all the inflows into your bank accounts are transactions proceeds, and they shall compute facts at the current rate is 7.5% on the sum total. This is the reason why you should not allow your personal money filter into your bank accounts. Even if somebody to give you money, that has nothing to do with your business. Never you allowed it to filter into your company bank account, because you may not evidence to prove to the Board of Internal Revenues. So I then advise you, if you have a company registered and you have not started doing any business with it at all, do not open bank accounts in that company's name. If you have opened an account for that company name, do not transact with it. Keep it on hold. Transact personal business with your personal bank account. That way, you only have to pay what we call payee, personal, or pay as you earn. Do that with your state internal revenue service. Now, if you have registered a limited liability company and you have not started business, ensure you filed zero returns with the FIRS, Federal Inland Revenue Service. And that means that at the end of the period, this will avoid charges. And of course, we'll look at this when we get to tax planning and then tax management. These are some of the key things you have to do to avoid payment of penalties and payment of some levies. So since you know that you have not done any business with that limited liability company account which you have opened, because that limited liability company have been registered and bank account is opened. So what you need to do is to make sure that at the end of the period, you file zero returns with the FIRS. If you want a business name, for whatever reasons, instead of registering a company, why not just start with a business name? Business name. You can have your corporate bank account, but you will not have to file returns to the FIRS. Remember, it is just a business name. You will only remit VAT, value added tax, and then withholding tax on invoices from limited companies. Any other tax, basically payee and withholding tax on invoices from non-limited enterprises, will just be with your state's internal revenue service. And apart from that, do not transfer personal business with your corporate bank account. Don't try it. Avoid it. Stay away from it. Avoid being charged or paying money or taxes which you have not earned for that business. Now, If somebody give you money to keep, do not receive it through your corporate accounts. Receive it into your personal account. So, for example, somebody give you, either your brother or your uncle or your daddy, give you money to build a house for him or to buy a car for him or to buy a property for him. Such money should not pass through your business corporate bank account. You should not try it. So the only thing that you can do is to allow such money pass through your personal bank accounts. Do you want to start that small business today? Register a business name and not a limited liability company. Please save yourself from avoidable tax issues and matters in the future, because it will pop up as time goes on when you finally venture to do business with that business name or account. So now there's something that we need to also consider. As businessmen and women, and as big brothers, you are in this country. You know the changes in financial policy. The recent one is a change, the new cash withdrawals limited or limits. So let's listen to this. What do we do with that? The new cash withdrawals limit will have a serious tax implications. Market will have a serious tax implications that so many people will be brought into the tax nets. And those people that were avoiding paying tax, they will now capture them, bring them into the tax nets. Especially for the individuals and medium and small business enterprises. Note that many people will be forced to transfer businesses using electronic payments. And small businesses that currently operate mostly on cash will now become visible for the tax authority. You see, because the volume of money or cash is being reduced, and the CBN or the public banks of Nigeria now has that all the money should be moved into the bank. And you have a limit. You have to withdraw. You cannot say it's my money. And they want to do this so that they can track and trap all the people keeping money outside banking circulation. And once they are trapped, whatever business you do with your money, you will be able to monitor it. And then some taxes or levies will be put on that money. So this new policy then would trigger various tax obligations, including number one, income tax. You know, the company income tax, you cannot exonerate yourself. You can't escape it. So that means that under the income taxes matter, if your business is registered as a company, you may be liable to company income tax. According to the law, depending on your annual turnover, And there are segments that you can pay tax in the recent time because of the new policy. That is no CIT, that is saying company income tax, if your turnover is below 25 million. That is 20% if your turnover is between 25 million to 100 million. And then 30% if your turnover is more than 100 million. In addition, you have to pay educational tax of 2.5%. So it is now that you need to sit down and then think through and look at the volume of your transactions and then start preparing and planning which categories or which group do you involve or you fall into. Is your business below 25%? Good. Is it between 25 million rather? Is it between 25 millions and 100 million? You know that your tax there, company income tax that you will levied, is 20%. But from 100%, 100 million and above, it's going to be 30%. And additional tax that you have to pay, this no matter whether it's 25 to 100 billion or 100 and above, is what they call educational tax. And that educational tax is 2.5%. Now, if your business is not registered as a company, then you will be liable to only personal income tax based on the graduated rates or taxable income rates, and which is between 7% to 24%. Now the first one is 7%, followed by the next 100, 11%, followed by the next 500, 15%, and then 19%, and then 24%. So it will go on that ratings, depending on how much you now have left after all the taxable items, all the deductible allowables have been taken care of. But let's look at this thing now. VAT was before 5%, but in the recent policy, it is 7.5%. So all businesses are required to register for VAT, value added tax, and the charge is 7.5% on their goods and services, except those with annual turnover below 25 million. Below 25 million. Then the other one is what we call payee. Pay as you earn. Pay as you earn. That is equality in taxation. You have to pay according to the your income brackets. You can't pay what you do not earn. So all this has to do with employees. All employees earning more than 30,000 naira per month are liable to pay as you earn, which must be deducted and paid to the tax authority by the employers on a monthly basis. It's being computed. You look at the annual income, and then look at the consolidated relief. Then look at if they have other things like housing, pension, insurance. All those things need to be taken care of before then you now calculate the tax. So you may also be liable to other statutory contributions such as pension, depending on your staff strength. Because a 7.5 and 7.5 contributory pensions scheme. Now let's look at individuals now. Now these individuals, the more transaction you make electronically, the more the tax authorities will get the intelligence tracking. You track your income and net worth, making it easier to fish you out if you are a tax evader. You know that people, you have two types of this tax. We have tax avoidance, we have tax evasion. Tax avoidance is legal, while tax evasion is illegal. It's criminals. And those who are liable to tax evasions are to face the music. So, you see that if you steadfastly and continuously withdraw money using electronic, you can't escape. You're not paying tax. Because your PVN and your TIN, tax identification number, is involved. So the tax authority will be able to track and trace you so that they can recover all the taxes based on your worth. So the question is, what do you do at this time? Looking at all this situation now, there are things you must do to avoid all these unnecessary charges. If you're a small business owner, you need to take some steps now. You need to plan your way out. So what do you do now? Number one, restart with the relevant tax authorities. The Federal Inland Revenue Service and the State Internal Revenue Service where you operate. Do the right thing, act right, and act fast. 2, open a separate bank account for your business and delegate one for that purpose if you already have a business account. And don't mix business money with your personal transaction. Separate it. And this is very, very the school owners have been consistently involved in these acts. They collect school fees and pack them into their bags and pockets and drawers and begin to use them. Business money is different from your personal money. For accountability reasons or accountability sake, you must have to demarcate and separate your business money, business transaction from your own personal dealings. Otherwise, you open a channel for tax authority to come in and you will suffer and dance the music of your wrong actions. So I need to plead with you so they can be on the safer side. Put a demarcation. Let there be a separation between your business transactions and your own personal transactions. Between your business money and your own personal money. They are not the same. If you mix them up, then you suffer the consequences. So, as a matter of emphasis, open a separate bank account for your business and make sure that you dedicate it for that particular purpose. The next one is that government on its part needs some sensitive information and then general sensitive informations they need to sensitize the general public, especially small businesses owners, and like the CBN, the APEC banks should ensure a proper handshake information flow with the fiscal authorities. For instance, the condition for excess cash withdrawals could include tax identification number TIN. And of course, these have been going on for some of us who listen to some of these important public notices. The federal government, through its agents, the APEC banks, they have been trying to sensitize the publics on the consequences, excess withdrawals, the implications. So we need to work hand in hand with this information. But let me also say something here so that you can avoid paying some penalties and heavy taxes due to carelessness or lack of information. Because if you are not informed, obviously, you will be deformed. But I wouldn't want you to be deformed, especially as we are in this year. I wouldn't want to waste your money, but this is a year of greatness. This is the reason why I came to tell you what you should do to avoid this. So I'll look at tax planning. We're just in January 2023. And if you want to avoid payment of some taxes, penalties, and fines, you have to plan for your taxes. So what is tax planning? Tax planning is the exercise undertaken to minimize tax liability through the best use of the followings. Look at that word. To minimize and then maximize. Minimize tax liability through there are tax avoidance is a great way of saving tax naira. So what do? You look at all these loopholes in the tax policy and exploit it to enable you to avoid some taxes. So the best way is that use all available allowances. There are different allowances available for you to apply it in order to reduce your tax liability. 2, there are deductions that they can equally apply to reduce your tax liability. There are some exclusions you can use, and there are some exemptions you can equally use in order to drastically reduce your tax liability. And sometimes because we are not aware of this, we allow ourselves to be exploited by the governments and our agents, and you paid money that you shouldn't have paid if you actually embark on tax planning. So tax planning will help you take control of your taxes and then saved your tax naira. It encourages the timing of both income and purchases and other expenditures. It also helps on the selections of investment types or retirement plans, as well as helping you on the filing statutes and common deductions. These are all the features of tax planning. Now, the objective of the tax planning is to comply with the provisions of income tax laws and its allied rules. It helps in minimizing tax liability in short terms and also long terms. So you cannot avoid this. But it's quite unfortunate that sometimes some of us businessmen, you do not look into this, and some people will be coming to exploit you. Therefore, this year, you should not open up yourself to all these exploitations. So start your tax planning now. Another one you can equally do is what we call tax management. It is also very key and important for you as business person, and even you as individuals, the company owners, business owners. You manage your tax. So tax management deals with the filing of various tax returns on time. You know that if you don't file it on time, you'll be fined and pay penalties. So on the proper tax management, you plan timing of filing your returns. So tax management deal with the filing of various tax returns on time, compliance with the appropriate provisions of the laws, and making timely payments of taxes so as to avoid payment of unnecessary penalties, interests, and equally face prosecutions. So tax management will help you also to minimize your tax liability, because if you follow up all these, there's no how you will not trim down amounts of your tax liability. So how is that you keep coming to this environment, this our chat center, were to give us a total and comprehensive, complete training that will be able to affect you, affect your thinking, affect your business, affect your health, affect your ministry, affect everything about you, totally and holistic. So check up. If you are not subscribed for this YouTube, do so now. And then share it, comment, pass it to others. Especially on this one, you you need it. And business owners, both small, mediums, and maker businesses, they need this information. But these are the information you need at this critical time. So I welcome you and appreciate you for coming. And I want to encourage you to keep coming. Check the YouTube, my YouTube's, sign, subscribe, and then you'll be happy that you have done so. Thank you for listening. Bye for now.